Today, we're going to go over the 5 best Fidelity index funds you can invest in to get consistent growth. Number 1 on the list is Fidelity 500 Index Fund, FXAIX. First up is the Fidelity 500 Index Fund, or FXAIX. This is one of the most popular funds out there, designed to track the performance of the S&P 500 index. In other words, it's made up of the 500 largest companies in the U.S. stock market. We're talking industry titans like Apple, Amazon, Google, and Microsoft. One of the standout features of this fund is its incredibly low expense ratio, just 0.015%. To give you a clearer picture of how good that is, if you invested $100,000, you'd only pay $15 in fees annually. That's it. It makes the FXAIX one of the most cost-efficient ways to invest in the U.S. stock market. As for performance, FXAIX has delivered an average annual return of around 12 to 14% over the past decade. That's solid, especially for long-term investors. So, if you had invested $100,000 in 1 year, it would have become $114,000, $145,000 in 3 years, $185,000 in 5 years, and if you had invested it 10 years ago, you would have almost $350,000, which is more than 3 times that amount today. And with 500 companies in the fund, you're not just betting on 1 or 2. You're getting diversification and stability. Each company is a leader in its respective industry, so you can rest easy knowing your investment is in good hands. The FXAIX rarely disappoints. Second on the list is Fidelity Total Market Index Fund, FSKAX. Next, we've got the Fidelity Total Market Index Fund, or FSKAX. This one gives you exposure to the entire U.S. economy. It doesn't just focus on the big names like the FXAIX. It also includes smaller and mid-sized companies. So you're getting a piece of the whole pie. The FSKAX tracks the Dow Jones U.S. Total Stock Market Index, which consists of about 3,000 stocks across various sectors. And like the FXAIX, this fund is a great earner. Over the last decade, it's delivered average annual returns of around 11 to 13%. That's impressive, considering how diversified this fund is. Honestly, the entire U.S. economy would have to collapse for you to lose money, which isn't likely. To put it in numbers, if you invest $100,000 in FSKAX, it would grow to around $112,000 after just 1 year. In 3 years, that grows to $140,000, and in 5 years, you're looking at about $176,000. In 10 years, that investment could more than triple, reaching over $300,000. I mean, who wouldn't want to triple their money in just 10 years, right? And just like the FXAIX, the FSKAX has a super low expense ratio of 0.015%. That means fewer fees, more growth potential, and a smart choice for long-term investors. Number 3 on the list is Fidelity NASDAQ Composite Index Fund, FNCMX. If you're into tech and want a fund that invests heavily on it, then the Fidelity NASDAQ Composite Index Fund, or the FNCMX, might be for you. This fund tracks the NASDAQ Composite Index, which focuses heavily on technology. Think Apple, Amazon, Tesla, and other innovative giants. What makes FNCMX unique is that it allocates around 50% of its holdings to the tech sector. That's huge. So if you want to get in on the most game-changing companies in the world, this fund is a solid option. But with great growth potential comes a little more risk. FNCMX has averaged returns of 15 to 19% year to date, the highest out of all the funds we're talking about today. However, with such high growth potential, there's also volatility. You'll want to be a bit cautious when considering this fund. FNCMX also has a higher expense ratio than the other funds on our list, sitting at 0.29%. So you'll pay a bit more in fees, which is no big deal, especially considering the upside of potential growth. For instance, if you invest $100,000 in this fund, your money could grow to $117,000 in the first year, $160,000 in 3 years, and $219,000 in 5 years. And after 10 years, you're looking at $480,000. That's almost 5 times your initial investment. So, while there's more risk involved, the growth potential is significant. Number 4 on our list is Fidelity International Index Fund, FSPSX. Now, this one's for those of you looking to expand beyond US borders and tap into international markets. The Fidelity International Index Fund covers developed countries from Europe to the Far East. So, if you're all about diversifying your investments across industries, this fund takes it a step further by diversifying geographically. You've heard the saying, don't put all your eggs in one basket, right? Well, FSPSX spreads your investments across the globe, giving you exposure to economies like the UK, Germany, Australia, Japan, and more. However, because this fund casts such a wide net, the performance is a bit more conservative. It averages around 5 to 7% annually, which is lower compared to the other funds we've covered. But keep in mind, we're trading some growth potential for stability here by investing in a broader range of developed economies. So, what does that look like if you invest $100,000? After 1 year, you're looking at about $106,000. In 3 years, that grows to $120,000, and by year 5, you're looking at $140,000. Fast forward to year 10, and your investment would be around $200,000. I get it, these numbers aren't as exciting, but remember, this fund is all about stability. And the best part? The expense ratio is just 0.035%, which is impressively low for an international fund. That's the beauty of Fidelity Global Diversification without breaking the bank on fees. The last one on the list is Fidelity US Bond Index Fund, FXNAX. Next up, we've got the Fidelity US Bond Index Fund, which tracks the Bloomberg US Aggregate Bond Index. If you're after maximum stability, this one's for you. It offers a mix of US Treasury bonds, mortgage-backed securities, and corporate bonds, basically giving you full exposure to the US bond market. Now, bonds are known for being safer than stocks, and FXNAX is a great choice for anyone who wants steady, modest growth with almost zero volatility. Like most Fidelity funds, the expense ratio here is super low, just 0.025%. That's rare for a bond fund, and it means you're keeping more of your returns. Another advantage of FXNAX? It provides regular income through bond interest payments. So, if you're looking to generate a steady cash flow, especially in retirement, this fund is ideal. Performance-wise, it's not going to blow you away, delivering an average of 3 to 5% annually. That's typical for bonds, but it's a reliable option for anyone seeking long-term income. Let's break that down. A $100,000 investment would grow to about $104,000 in 1 year, $115,000 in 3 years, $125,000 in 5 years, and around $160,000 in 10 years. Sure, it's not as high as other options, but with the level of stability this fund offers, it's worth keeping on your radar. So, there you have it, the 5 best Fidelity Index funds, broken down and ready for you to consider. Whether you're after high growth with the Fidelity 500 Index Fund, FXAIX, full market exposure with the Total Market Index Fund, FSKAX, tech-driven gains with the NASDAQ Composite Fund, FNCMX, international diversification through the International Fund, FSPSX, or rock-solid stability with the US Bond Index Fund, FXNAX, there's something for every type of investor here. The beauty of these funds is that they offer low fees, solid diversification, and consistent returns, which means you can start with any amount and build your portfolio over time. And let's not forget the added bonus. These funds are designed to be low maintenance. You're not constantly buying and selling. You're in it for the long haul, letting your money grow steadily. It's all about finding the right balance for your financial goals. Whether you're in it for growth, stability, or something in between, Fidelity's got you covered. The key is to start now. The sooner you invest, the longer your money has to grow. Thanks for sticking around until the end. If this video helped you get a better understanding of these index funds and how they can help your financial future, make sure to give it a thumbs up. And hey, don't forget to hit that subscribe button so you don't miss out on our next video. Happy investing, and we'll catch you in the next one.